is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling, prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create the perfect relationship between you and your body. Treat your body with love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you are learning to have a perfect relationship with anyone else. Market-wise, let's take a look at it out here. We have the Dow Industrials down 249, NASDAQ off 175, S&P's down 36. Volatility in spades. What you have out here, Dow's down 1%. You got the NASDAQ off 2.3%. S&Ps are down 5%. Gold contract down $11, trading at $13.44 an ounce. Silver down 16 cents, $16.51 an ounce. Copper up 3 pennies, $2.99 a pound. Light sweet crude. Let's see, where am I? I change that crude number. Light sweet crude right now trading at a price point of $64.82. Notes and bonds are saying it all, folks. Bottom line, they wouldn't back off when we went up 700 points yesterday. They weren't backing off this morning. We went up another couple hundred points. And bottom line, they look at the notes and bonds. They're saying what's going to happen out here. 10-year note up 16 ticks, trading at a price point of 120.31. 30-year bond up a full point. And 1 tick at 145.24. King dollar down King dollar's up 376 ticks, 88.980. The euro is trading at 124.03 to 1 US dollar. The yen is out here trading at 105.5 to 1 US dollar. Our phone number is 877-927-6648. What's called, folks? I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, folks, it looks like we have set up a very large ABC structure is down, a probable ABC structure down. What we did out here, if we look at the SPY, your A point out here is on the 13th of March, 280. Your B point is the low of last Friday. Your C's today. Because why? Guess what? You're down on volume. You got up on volume today, gave it up in spades. That sets up a price projection of a 1-to-1 of 244.19. And 244.19 will bring you under the 252 high volume low that I suspect we're going after anyway. And 240... It's going to be intriguing, man. 244 is down there, man. 244. Yeah, 244 brings you back to July of 2017. We go take a look at the NDX 100. Now, the NDX 100 basically started this baby. NVIDIA started it, actually. But here, we'll go through the NDX 100 first. 3 Qs. What do you have with the 3 Qs? Same type of setup. It's a larger ABC down, though, because with the 3 Qs, what you had the high that was established out here at the 175.21. That's your A point. Your B point is last Friday again at the 158.43. That gives you a price projection of 148. And 148 also brings you under the February 9th time frame. In fact, it's going to bring you right where the gap is, where we gapped higher in October. Dow Industrials. Dow Industrials, that is a monster ABC down. It's a 1,900-point ABC down. Bottom line, same type of setup. You get the A point there at 25,449 from the same. Oh, these are all the same dates. B point last Friday. C today. That brings you down to 22,500. And this thing is going to be that's going to be a trip, because that would bring you back to September of 2017. So we'll see how this whole thing shakes out. But bottom line is that the setups are out there, the volatility's out there, all of the above is out there. Some of the higher volume stocks out here, you get GE. We're going to get back to that. GE's up 61 cents at $13.50. Microsoft's down $3, $3.50. Apple's down $3.50. NVIDIA is the monster out here, if you take a look at it. NVDA, this thing went south in a big way. You're down $17.50. We had a high out here of $2.50. Right now, you are trading at $2.26. Facebook, same type of set. Well, Facebook's been going down hard anyway. Facebook very well could be a monster ABC down. This is going to be wild watching Facebook, because if it is an ABC down, 177, you're talking, that's another $27. So you got, that's about 140. What Facebook has done, it's gone right into with volume where it broke out from in July. I expect that's going to get taken apart pretty quickly. Big numbers out there. GE, let's go to GE. So the big rumor in GE is that Warren Buffett's going to come in, save GE. Let me tell you something, folks. That's not, well, hey, we'll find out if it happens. Bottom line, GE, this is like a dead cat bounce. Buffett, my take, fundamentally, Buffett's smart enough that it's not even close. It's not even close, because what's buried underneath the whole GE deal is like books that are so slippery it's beyond belief, and I just can't see it happen. He might lend them money to stay alive, but bottom line, guess what? Not even close. Some of the, let's go to Amazon. Let's see what some of the larger FANG stocks are also doing. Amazon's down $43. Netflix, NFLX. Now, I want Netflix and Intel. Yeah, see this? Netflix is down $16, but that's not, you know, we were up 16 yesterday. Intel had been one of the best performers on the way down. Yeah, and see that they're still not walking Intel. You know, I said, listen, man, my take is that we're going after this February 9th low. We probably have an ABC structure on the way down. It's a perfect setup for one, and what I mean specifically, you get the volatility in spades, selling comes out of nowhere. When you get selling that comes out of nowhere, all the surprises in a bear market, bottom line, surprises in a bull market, you get buying that goes upside. Surprises in a bear market, see ya, don't want to be ya, you go downtown, and you go downtown very quickly. We take a look at the NQs out here. What you're going to see with the NQs, I believe we're right back to where we started. Yeah, we're right back to where we started at 11, where it turned yesterday. So the low of yesterday where it turned at 11:30 was 66.06. No, 65.7. Look at this, unbelievable. 65.76 is where you turned. We just hit 65.72. Pretty intense. Stay right there, folks. We'll be coming right back. 877-927-6648. Dow's down 219. Nasdaq's off 174. S&Ps are down 34. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now down 175. Nasdaq's off 152. S&Ps are off 28. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got a great program here every trading day, noon to 1 Eastern Standard Time. You can get all that programming right at TFNN.com. Now, what you can also do is just go to YouTube, folks. Go to YouTube. You put in TFNN on the search bar. It comes right up. Just subscribe. It's free. Every program you want is right there each and every day. Now, as you come over to our website at TFNN, of course, market volatile beyond belief. I'm Mr. Basil Chapman. A week from today, 6 to 7:30, next Tuesday, the power of the 4th highest peak in the Chapman wave, the Peak D. You can come into this webinar the way you do it. Go over to our website. Test drive Basil's newsletter. It's a 30-day money-back guarantee, 1 month. You're going to get a great newsletter as well as going to a great webinar next Tuesday night, 6 o'clock. Basil Chapman, hold on for the ride.
What a ride, yes.
It's pretty amazing. There's no doubt, man. There's no doubt.
You know what's fascinating about this particular phase of the market is that, you know, we always look at market as if they're fractals. This is part of human nature, just as we repeat the same actions over and over. So you can see the same chart formations in different time frames. And have a look at this. There's this pattern that I drew in here for subscribers. Let me make it a little bit bigger. On the left is the daily chart. In the middle is the weekly. And on the right is the monthly chart.
Okay.
And what we're looking at is there's a pattern that I call the lowercase h in my CD introducing the Chapman Wave methodology. I talk about this a lot. And I jokingly years ago called the chapter the dreaded H. One of the reasons why I called it the dreaded H is because it looks like a lowercase h. You've got a straight line coming down, and then there's an arch formation. The whole thing about this particular pattern, that's what I'm going to be talking about, and this is a perfect time for it a week from tonight, is that when that left side is taken out, it can go much deeper. And there's a little tiny one right here. I've even got the little H put in. This is where we first shorted the Dow just after the all-time high, when it hit 26,616. Then it ran down, made a low, and we had already got out of the shorts, and we went back to the long side the day after the low, expecting that the H formation would occur, and it did. and it bounced, and there was another little H. That second H we shorted. We're still short now. One of the reasons why I want to remain short, even though we did try for a long position today, which worked out for a moment, and then we got stopped out. And it's a very interesting thing because I've been talking about some of these techniques on a week from Tuesday night. One of the techniques I have is called the Chapman wave Trin gauge. And what I use is Richard Arm's Trin gauge only for particular numbers. And when it's very low, there's a good chance that the Dow the very next day is going to pull back. And sometimes the Dow, the futures this morning were up 130. And I said to subscribers to my opening call, I don't know how it's going to work, but if it goes negative, that'll be a successful test of this Chapman wave methodology in this particular technique. So the market opens, goes much higher, and then all of a sudden pulls back very sharply, goes negative. That's where we went long. And in fact, I just forgot today because I was in a bit of a hurry. I had to do something first. So I didn't. What I usually do is I say, if we get the long position, and this I said is just a trading position, it's got nothing to do with our more intermediate term short. Usually I would say if it goes to a certain point above whatever we bought it at, raise the stop to the entry price, and I forgot to do that, so we got taken out for a small loss. But the idea was correct, but we didn't manage to make money on that. Most important is this H formation. Now look, all of a sudden, a different time frame. The weekly has the same thing. And the MACD, the moving average convergence divergence, is very negative, and the stochastic is very negative. So I'm anticipating that bounces will probably fail, and we'll keep coming back, getting closer to this 200-period moving average of 23,500 in the Dow, and that's going to be critical. The next test of that, I think, would be going quite a bit lower. And one of the reasons is there's a candle pattern that I developed many years ago, and I call it expand this. The Chapman wave Roman candle. It's just a little joke because it looks like a Roman candle where you see a little tiny piece of the wick. That's what you light. And it's got a long wick and a red body that is usually half of the distance of the entire candle. And my rule of thumb is if in a shorter time frame there is a move halfway into the wick, the lower part of the wick, in this case I said the weekly chart, if it closes under 24,200, watch out because we're probably going to test the low of 23,360. Well, we went to 23,509 on Friday. So that way under, so I'm anticipating we are going to be going down to test that 23,360, even if we have bounces. And one of the things I was looking at also, and I'll be discussing this because this to me is very important, and I've been discussing this with you over a couple of weeks. I've been saying, I've got these PDs in so many of these high techs, these major stocks that have been the real winners for the past few years. They started to show deterioration technically. So the QQQ, we were very lucky using the 120-minute chart to enter the very day of the all-time high at 175.21. On the 13th, we managed to short via the triple Q's short position, so you can buy the long position, but it's already made up as a short ETF, so that you can put it in your IRA. You don't have to worry about any conflicts or anything like that.
Right.
It is. It's very nice to be able to do that. So we were short with less than a point from the all-time high, and we're staying short because I'm looking at this with a peak in the weekly chart, a leg D in the monthly chart. It's going to have to, for me, it's going to have to prove itself by the QQQs getting into the 170s, and I'm not sure it's going to be able to do that, not in this move. So we remain short, and you can see I spoke to you the other day about Google. Google here. This is Alphabet. I'm going to the Google, actually. This is the shares. I think this is the C shares. Made a peak D at 1177.45. I call it a Chapman wave 2-bar reversal, and it's gone from the 1170s, trading right now 1,014. And we've got that H pattern here again in the weekly. So a lot of these stocks, Amazon, which has been the absolute leader and is still acting very well, I'm watching it. It made a peak D right there in the daily. So I'm very cautious here, and one of the reasons why instead of just being short-term cautious, I'm more intermediate term, is because even the S&P, look at the S&P right now. This same candle that I was talking about, this made a peak D in the last move up in the daily. It's got a peak D in the weekly chart and a leg D in the monthly, and there's that Roman candle again. from February, and we're already halfway into the wick. So I'm very cautious, and as I say, yeah, there could be counter-trend rallies, but I think one has to be very careful. So my summation right now is that caution is the watchword. There are counter-trend moves. You're going to have to watch the leadership very closely, and I'm a little upset that the XLF is failing to rally. It's not looking very good today. And there's the weekly chart of peak D, the same arch formation, that lowercase h. So yes, this is a time to be very careful.
And folks, you know, you can come over to our website, sign up right now for his newsletter, get into the workshop, find out all about the peak Ds next Tuesday night, 6 to 7:30. And of course, every trading day right here, noon to 1 Eastern Standard Time. Great show. Basil, you have a great one, safe one. Of course, we look forward to the show tomorrow.
Thank you, Tom. You too.
Thank you. Stay right there, folks. We'll come right back. We get the Dow down 272, Nasdaq's up 186, S&Ps are down 39 bucks. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 310. Nasdaq's off 198. S&Ps are down 44. If we go look inside the Dow Industrials, strength versus the weakness out here. Taken away from it on the way down. You get Goldman. Goldman's putting 50 negative points, Boeing 47, Apple 30, Microsoft 27, putting positive points into the Dow. You have Procter & Gamble putting 9, GE putting 3, Nike putting 2, and that's kind of all she wrote right there. Pretty intense, actually. NDX 100. We take a look at the NDX 100. What do you have with the NDX 100? NDX 100 out here. Strength versus the weakness. Let's see. So there's only 3 stocks that are positive at all in the NDX 100. You got Dish Networks up 0.7%. Shire is up 0.4, and Win is up 0.1. The big number on the way down, NVIDIA. NVIDIA is down 9.3%. Or $23, and that's not stopping. Something to remember about NVIDIA, too, folks, is that NVIDIA, let me bring this back so you can kind of see this. NVIDIA was the first one that actually started the first route on, actually, no, it's way back here, yeah, in November. When we came down in November, it was NVIDIA that started that baby on the way down, man. Now, we came all the way back. There's no doubt about that, and then gave it up again. But this is one monster, man, and NVIDIA wants to go after that high-volume swing. These high-volume swings, man, are wide open. They're going to get hit. Bottom line is that we'll see whether these are monster ABC structures on the way down, because that's how they seem to be setting up right now. And what you do get, by the way, on an A to B equals C to D, they're straight-line moves. A to B is a straight-line move. Most of the time, B to C goes all over the place. If, in fact, this ends up being an ABC down, you really better get out of the way, because what ends up happening is that it's really unusual when you, number one, don't go all over the place, and number two, you have a 2-day deal and you're going after the lows once again. Tesla's down 8.5%. That's down $26. You get Micron Tech down 6.4%, or $3.70. Adobe's down 6.2%, or $14.28. If we go back to Tesla for a second, let's take a look at Tesla. This is going to be, it's going to be interesting to see, is this going to be the beginning of a substantial downdraft, and he just may have more problems getting money. And the reason I'm saying that is this. What you have with Tesla, Tesla's been in this consolidation since April of 2017. We broke it, and you broke it with conviction, big time, too. I mean, we're breaking this thing down. All the volume had been downtown. If you want to take a look and you put Tesla up, you can put it up on a weekly, put it up on a monthly. It doesn't matter what you put it up at. And you go put a trend line at those highs, put a trend line at those lows. You're going to see that that's been building cause to go downtown for quite some time. It blows it away. As it blows it away, what you want to do now is like, okay, you blew that away. Where do you want to go now? Well, guess what? When we take a look at this, game is 265. And if you come into 265 with the type of volume we have, then you're talking about 141. That would be pretty amazing. There's no doubt about that. What is absolutely amazing out here as we're speaking is that inside the S&P just gave up another 15 points. Right now, you're actually below the lows that were established out here yesterday, which was 26.03. We just hit 25.98. Didn't take long to give it all back. Inside the, let me look at the composite for a second. The composite is a mess. Yeah, the composite, look at this. The composite went right after it. So the composite is below, right at the lows of yesterday. This is going to be pretty intense watching this whole thing shake out. Yep. And we take a look at the QQQ. The Qs are right at it also. So the low of yesterday, Friday, in the Qs was 158.43. We hit 157.96. You're at 158.54. Bottom line is that you're coming into this, and you know, we'll see how this shakes out tomorrow morning. Because what's happening now is, so check out what has happened here. So you have an AB, you have a C set up, and now you're coming right down to the B today. Now, when that happens, let me go over to Google for a second, because I want to show you something. When Basler just was talking about Google, I brought this up. Now, this is the real danger point. And if we see this happen, get out of the way, because the way Google's set up is that Google's been in this consolidation since October of 2017. It looks like Google is going to jump the creek tomorrow. And if Google jumps the creek, what jumping the creek means is this. You come down to the bottom. You can jump the creek on the way down or the way up. So in this case, we're talking about the way down because that's where we are. You come down to the bottom of the consolidation. Now, Google has already come down there with volume. You know, February 9th is your benchmark, right? So you're down there with volume. We're down there with volume again. You jump that creek, guess what? Google has a monster gap open at $875. That would just put destruction in the market very, very quickly. And, you know, there's a question in the den about do you think that margin calls are going to sell off the market more? I don't. What you would see happen is this, is that if, in fact, Google jumped the creek tomorrow, that's when you'd have a very large loss factor across markets in a very large way. The reason being, when you have a consolidation that's been in place this long, October of 2017, there's plenty of people that are long Google. You jump down, then all of a sudden you can go all the way back to, let's see, May of 2017. If you bought Google, that's a problem child. That's how large downdrafts actually get going. The second part of that question was, do you think the sell-off is due to the ETF structures? Yes, this is what happens. But you can't blame the ETF structures for the sell-off without saying that ETFs make the markets go up, too. That's how this works, okay? What happens on the ETFs, it's important to understand how the ETF structures are structured. Specifically, what I mean is this, is that it's the chicken or the egg. As the market goes down, and that's why that's why here, if we put this up, that's why you just did see that S&P go down 2 different legs over 10 points. Because what you had is that they was either selling S&P stocks, and then they had to sell the SPY themselves, and then they had to sell the future. That's how it goes. The same with the NDX 100. Bottom line, you sell the FANG stocks, you sell the big tech stocks, they got to sell the QQQ. As they're selling the QQQ, guess what? The largest weighting structures inside the QQQ have to get sold. That's how this deal goes. So, pretty wild, man. We're in a wild market. There's no doubt about it. And, you know, just protect yourself, folks, because, you know, we haven't had a market in years, a volatile market. And you get not only a volatile market, but you have a volatile market that you haven't had a correction in since 2009, really. A big correction. So it's coming at you. Stay right there, folks. We'll come right back. Dow Industrials right now down 344. You get the Nasdaq off 216. S&Ps are down 47. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 345. Nasdaq's off 214. S&Ps are off 47. Let's go over and take a look at the bond market. So the TLT. TLT out here today. This TLT is the iShare 20-year plus bond fund ETF. You're at 120.92. Bottom line is that you're over the swing point from March 22nd. That's 120.82. It's not going to have the volume. This will put some volume in at the end of the market, but I don't think it's going to put 6 million in. That being said, it's over it, and that's gunning for the February 14th level, which is 121.82. We go take a look at the 30-year bond. 30-year bond out here. February 14th, folks, is one of the benchmarks inside the bond market. The reason being is that what we did there that day, this when the bottom line, there was some heavy pressure inside the marketplace. The bond market went up to 146 in the 30-year, had volume, but then gave it up. Bottom line is that this is what you have right now. We are at 145.23. We hit 145.28. Remember something, okay? There's 32 ticks in 1 point in the bond market. So we almost hit 146 today. 146.21 is where it's going after. The difference in the 30-year does have volume expanding as we're going up into that level. Now, it's taken out the swing with lighter volume, but the volume is expanding. This bond market is saying, guess what? The broad market continues to want lower price. Money is filtering into that bond, and it's filtering very quickly. 2.773 is the yield out here in the 10-year today. That's a big drop, folks. We looked at this morning, we were at 2.81. So that is a big number. There's no two ways about that. We go take a look at the, let's go take a look at inside the Dow Industrials. I was looking at IBM. IBM was taking a pretty good hit. Yeah, well, IBM hasn't got its high volume low yet. What you want to do is that when you're looking at these markets, just look for where those high volume lows are. Those high volume lows are problem childs, and I expect you're going to see most of them get hit. ExxonMobil is underneath it now. That's a monster heads up, man. When one of the largest oil companies in the world is underneath it. 73.90, we're at 73.45. Chevron is making its way back into it. Right now, it's in the bar, but the bar in Chevron is so dramatic. The top of the bar is 118, the bottom's 108. We're at 114 right now. So big numbers, no two ways about that. Now, we're talking bonds. Let's go into the XLF. The reason being is that what you're going to see, banks should make money with rates going up, right? Right. Bottom line, February 9th, $26.76. Guess where we are, folks? $26.98. We've hit $26.95. we're going to be in a major correction here. That's what's happening. You're going to be in a major correction. Rates aren't going anywhere. The Fed's going to freak. This is going to go. See, now this is a classic too to jump the creek. The financials are. It's laying right out there. It's laying right at the gap where it broke out from. And if this jumps the creek, it's not as dire as Google, that's for sure, because this would just, well, you get $22, let's say, well, no, that's 25. 25 bucks would be next. $25.22. But that says quite a bit about rates in general, where the market's going, and what you have happening out here. The composite, the NASDAQ composite, man, that can drag things up, that can drag things down in just an incredible way. And that's what it's doing out here. It started in the composite. Right now you're down 3.31%. And if you look at NVIDIA, man, when this thing goes south, it just doesn't stop. NVIDIA's down $23. It started out that they said that they're going to suspend self-driving car testing. Bottom line is that then they do make those chips, make a lot of money on those chips. That being said, guess what? This is just a consolidation. Monster. You've broken the March 2nd swing low today. That's 221. 30 million shares versus 22. So that's saying now game is on. Game is on to February 6th. And the real question is going to be, now this is where the heads up going to be too. You're going to be able to see how, actually let's go to the DAX in Germany, because the DAX and the FTSE, they couldn't handle price out here today. See, the DAX is still under the February 9th level. The FTSE, oh man, that got a pop, but that's way underneath it. This is a big heads up, man. We're going south. Let me see if I have the volume yet on. Yeah, I don't have the volume on the bounce out here today in Europe. But you're gonna get a good flavor tomorrow. Actually tonight. There's gonna be kind of no relief on this deal because the fastness of this move says quite a bit. There's no two ways about it. If we do go back over to the S&P, I've seen fast-moving markets, folks. This is about as good as you get. Your S&P is down 60 ticks, and if we actually have had an 84-point movement today, that's 840 Dow points. That's the type of movement we've had. We had a high of 2679, a low of 2595. Right now you're at 2601. Big numbers, man. And you know the way this. Let's see, it's Tuesday. Well, we get 2 days left in the week. This week you have the markets closed on Friday. So if we go to the XLE, we take a look at what the XLE is doing. Yeah, that's just building cars to trying to get into that swing also. Some of the commodities out here, you know, you have, let's see, natural gas up 2.7%. Copper is up 0.4. Cocoa's getting hit. That's down 2.5. Crude's down 1.2. Wheat's down 1. Silver's down 0.8. Gold's down 0.8. Silver's down 1%, actually. Gold's down 0.8. Lots of moving parts out here. King Dollar. Let's go see where King Dollar is now. King Dollar got a bid out here today. That being said, it doesn't look, let's see if it held the price. It hasn't held the price. So we're at, oh, it's going to be so close. So 89.105 would be the number. There's a high of yesterday. You did 24,000 contracts. Yesterday, I believe we did 26,000 on the way down. You're going into 26,000. Yeah, 25,790 we did yesterday. We're at 24,660 today. But it's not holding price. See, good old King Dollar wants to go after this swing low also. The swing low, now that's been a consolidation, has been in that consolidation since January 24th. And that also looks like it wants to jump the creek. Now, the dollar is in a much larger ABC structure on the way down. Confirmed ABC down 82,340 handle. That's about where it's at. Dow Industrials, we're down 424. Let's see what that didn't give it. Yeah, it did give it all back. Yeah, gave it all back from yesterday. Pretty amazing. Stay right there, folks. Coming back next 10 minutes of trading, as well as numbers after the close. We have the Dow Industrials down 400. NASDAQ is down at 233. NASDAQ's off 54. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 393, NASDAQ off 222, S&P's off 51. And if we take a look at the volume out here coming into the close, you got the NYSE, we're at 600, so that's going to come in about 850. That's light volume, so we went to a higher high, light volume, sets it up. NASDAQ Composite, you're at 2. That's going to get interesting because that's going to come in at a good 2.50. So we'll see where that shakes out. The small caps. Now, on the way down, the first time, small caps were the strongest. This time, guess what? They're starting to fall apart, too. So this is going to be intriguing. The small caps, the IWM just went from 153 to 149, taking out yesterday's low as well as Friday's low. And, of course, with game out here on the small caps is 142.50. That's a long way from where we are right now. If we pull this back and put this on a weekly, yeah, same type of setup. It looks like the small caps are going to They're going to go after that high volume low. The real question is going to be, do they drop inside the next lower trading range? And I'd say one of the big heads up on this one is going to be Google tomorrow. You know, the way Google is set up, folks, Google looks to me like it's going to give the NASDAQ conniptions. Because when you set this up, it's like, man, you're at $1,000. Well, the top of the gap, going all the way back to October of 2017, is 1,008. So it's peaking its way in there. And if you jump that creek there, it's not just going to be the creek. That puts everyone that bought Google from October of 2017 in a losing position. And most of the time when you jump the creek, you know, in Google's case, you know, it's easy to jump down $25 in a heartbeat. If you get that, well, guess what? The bottom of the next range gets you into like 875 to 800. You wouldn't do that overnight, but then you're in the range. Then you're in the range, you start building to basically get down to the bottom of the next range. Stay right there, folks. We're going to be coming back with more numbers after the close. We have the Dow Industrials down 386, NASDAQ's off 220, S&Ps are down 50. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Don't make assumptions. Disconcern the truth. The problem with making assumptions is that we believe they are the truth. We make an assumption, we misunderstand, we take it personally, then we react by sending emotional poison with our word. And it does what? It creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We had the Dow Industrials down 344. NASDAQ off 211. S&P's down 42. Monster moves, folks. 4 days in a row, actually. Pretty intense. Gold contract down $11.30, trading at $13.43 an ounce. Silver down 17 cents, $16.50 an ounce. Copper up 3 pennies at $2.99 a pound. Light sweet crude $65.10. Notes and bonds, those are the story out there once again today. 10-year note up 14 ticks, 120.29. 30-year bond up almost a full point, 30 ticks, 145.21. yield, the 10-year yield right now just dipped its way under 2.8% again. We're at 2.783%. King dollar up for 381 ticks, 88.985. If we go over to King dollar, what you're going to see is King dollar failed once again to hold price. We did 24,800 contracts. It couldn't hold the high of yesterday, which is 89.105. Pretty amazing, actually, because guess what? You should be able to bounce a little after coming down 5 days in a row. King dollar, folks, making its way down to this swing low from February 16th of 87,830. Big numbers out here. All across the board, big numbers. Let's take a look at some of the higher volume stocks out here. They did some destruction out here. You had Twitter was down $3.85. Facebook was off $7.87. You had Microsoft down $4.30. Apple was down $4.40. NVIDIA was the big number. NVIDIA actually started the move lower inside the composite as well as the NDX 100. And this is the second time flat out that NVIDIA last November that started that move down and that took the market with it. $18.96. NVIDIA's trading at $225. You have JP Morgan down $2. General Motors is off $1. If we go over to the, let's go to JP Morgan for a second, because what you have out here, and this is where I'm going to stay with the bond market for a bit. JP Morgan, folks, you're off the highs. The high in JP Morgan is 118.75. You're at 1808. Your high volume swing low, which we haven't tested yet, is 103. The top of that is 114. Bottom line, you're going to go after it. You very well may have an ABC structure down on JP Morgan also. And if you do, 118.75 is your A. 106 is your B. So you're talking $12, which would get you into the $99 area. In $99 areas where JP Morgan broke out from November of 2017. And if that's what we get, you're going to talk, that's not only just a big number, that's a big number in the context that the Fed will not be going up on rates 3 times this year. And I suspect what this is all about, actually, is that we're in the beginning phases of a major correction. That's what's going on. And if that's what we have, what you're going to see the Fed basically freak out and say, okay, well, yeah, I know we're supposed to go up on rates, but we're not going to go up on rates because this market, number one, is highly volatile. Number two, it's in a corrective phase at this point. And when you go look at the market, you bring it back to 2009, okay, almost what, well, yeah, almost 9 years. Bottom line, folks, is that you could say you had like one consolidation. You didn't have any correction. That was great on the way up. It's not great on the way down because percentage-wise, it doesn't have to go down that much to be a normal correction in a market that over the course of years will go higher. But guess what? The problem child has to do with if you just do a 0.382 correction of the whole move, it's going to be pretty nasty because that would bring the S&P down to 2023. And just see, in a 0.382 correction is a normal correction in a market that actually wants to go higher. So bottom line, problems in paradise out here. We're going to take a look at some of the Dow stocks out here. You had Boeing down $7.85. CAT was off $2.20. Oxy was, GM was down $1.12. Big Blue was down $1.46. 3M was off $4.37. Inside the NDX 100, strength versus the weakness inside the NDX. Tesla was the number. Tesla looks to me like it's going to be in trouble. Tesla was down 8.2%, or $25. NVIDIA was down 7.7, or $18.96. If we go into Tesla for a second and take a look at it, what you have with Tesla, Tesla broke out its lows, monster volume on the move. We pull this back, and what you're going to see is that this consolidation, it broke the consolidation that it's been in since May of 2017 and broke it with volume. That's setting up, you're going to go to the next trading range. The deeper that you get into $286, which we're at $279 now, the bigger the probability is that 141 is coming at you. 141 in Tesla is a high volume low. So that would be pretty intense because Tesla topped out in June of 2017 at 386. And Tesla, bottom line, has to come to the market for lots more cash because Tesla's burning $1 billion a month. Big, big numbers. No two ways about that. After the at 4:30, we're going to have the oil numbers out today. Crude oil right now trading at $64.88. What crude did out here today, it failed at its swing point. I got up to the swing point, got up to the price point today of $66.41. Got over the high of January 25th. Couldn't handle the price, $66.02. So it's really going to be intriguing watching this. First off, this API number come out at 4:30 this afternoon, as well as the EIA number tomorrow morning at 10:30. Because when you do look at the XLE, bottom line, XLE, as well as ExxonMobil, as well as Chevron, they've been going lower for a long period of time. Exxon is underneath the February 9th level. $73.90 is the level. Exxon is trading $73.70. Says quite a bit. Stay right there, folks. We're coming back with our man, Mr. Andy Heck. We are going to be talking markets. We're going to be talking commodities. Dow finished down 344. NASDAQ off 211. S&P's down 44. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 344, NASDAQ off 211, S&P's off 44. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. He also has 2 great newsletters. He has the Daily Essentials, which is a daily newsletter. He has a Technometer Commodity Report, which is his weekly. You can go get both of those right now by coming over to our website at TFNN. You go to newsletters, trading newsletters for Daily Essentials, investment newsletters for Tech Insider. They both come with a 30-day money-back guarantee. Andy Heck, what's going on? What's happening, brother?
How are you? There's a lot going on, huh?
There's a lot going on, and not only that, I don't know if you saw it yet, but I know you must feel it every day. I saw that Las Vegas was the second highest in the whole country, going up year over year, 11.68% real estate.
Oh, on the real estate, yeah, I know that from my neighborhood. It's insane. I mean, it's crazy. We got a lot of people moving in here. It's a wild market, no question about it. I've been up since really early this morning and watching these markets, and I have to tell you, Tom, this has been one wild day.
Oh, yeah.
This has been one wild day. It's been a wild week. I mean, you got a 600-point move to the upside yesterday. I don't even know where we settled today. What were we down, about 380 or so?
Yeah, well, if you take a look at the S&Ps moved 80 points today.
Yeah. This is classic risk-off kind of behavior in markets. I mean, it's very memorable of the time. I remember in 1987, lots of volatility, and I don't think a lot of market participants really realize yet how serious this can be over the coming days and weeks.
Oh, listen, you can lose it a second. There's no doubt. There's no doubt, man.
Yeah, you got to be really careful out there. Now, in all these markets, because look, you say we say we can really fly to. I really like gold here. I really think that gold is a great market here, and I do think it's going to go over $1,400 an ounce. But I will tell you, in a risk-off, they sell everything, so we got to just be cautious in all markets. The one market that's hanging in there, not even by a thread at the highs, is crude oil.
Yeah, well, it's going to be great. We get the numbers at 4:30. I mean, it tested that swing point today and couldn't handle it, though. So,
right.
But it's at highs. There's no doubt, man. I mean, it
keeps bumping up. We talk about the swing point. We keep bumping up at $66 and change.
I know.
And, hey, it can't handle it. So what, it goes back to 60, no big deal. But the question is, if there's a risk off and it goes to 45, those kinds of things are possible in wild markets.
Totally. Andy, there was a great story yesterday. I had put it on the air, and what it was, folks, if you missed it, was in Midland, Texas. So Midland, Texas, folks, West Texas, that's the epicenter of our oil markets, right? 3 years ago, hotel rooms, I know the area. I haven't been there, but I know it because I used to Google it quite a bit. There's just oil fields. That's all there are. But, you need hotels for people coming in. And they're all small hotels. But bottom line is that the hotels were average price $93 a room 3 years ago, right?
Yeah, how much are they now?
$400 to $700, and you can't get a room.
Yep, yeah. And you know what?
Excluding taxes.
I talked to the guys who were doing construction in my neighborhood. I got houses going up all over the place here. They tell me they can't get labor. Not because of, the problems with Mexico or anything, because they're all going to the shale platforms.
Oh, interesting. Wow. Yeah.
Because
big money,
right? They're paying, instead of making $45,000 doing construction in Las Vegas, you can make $120,000 on a shale platform.
Sure. Yeah, no.
So the bottom line is, hey, these high oil prices, they are making the tightening the employment market here.
Oh, yeah.
No question. No question. But, look, I look across these markets here, gold, hey, it was looking great yesterday. It's looking terrible today. Silver.
I don't think it really looks that bad. I mean,
no, I mean, look, it put in kind of a reversal. It kind of put in a bearish reversal today. Listen, gold, you don't even have to look at gold. Look at the dollar. It'll tell you where gold is these days. That's what it is. And the dollar looks lousy to me.
It failed to hold the high of yesterday.
Right. I don't like what I'm seeing in the dollar index. I just, this is like a classic bear market. And when you have a market, Tom, that has the fundamentals behind it, interest rate differentials, the whole thing, the good economy, all these things, and it can't go up. Ooh, that's an ugly, because eventually we do get bearish news.
Yeah, no, listen, I agree. And if you look at if you look at the notes and bonds, guess what? We were up 700 points yesterday, and the notes and bonds didn't move, folks.
And today it's flight to quality. It's the 30th
exactly.
Right,
Exactly.
it's sucking the capital in.
Yeah.
You know? And I have to tell you, tariffs, I do believe in my heart of hearts that they'll reach an accommodation. I think this is a giant bluff. I really do.
You know, it can be a giant bluff, but, you know, chaos is not the way to do business. And,
I understand what you're saying.
Markets know that. So I don't care whether it's a bluff or not. What ends up happening, you know, markets don't like chaos. And bottom line is that we might be just seeing people saying, you know what, it's been a good run. I'm going to take my money and go home for a while.
Well, they should. Yeah. This thing has gone up ridiculously, and markets don't go in a straight line.
Right.
And the bottom line is that,
right.
Hey, if you're sitting on huge gains over the last couple of years, you'd be crazy not to take some off the table here.
Oh,
that's my opinion.
No, listen, I
pay
agree.
those taxes, and actually the taxes are less now, so it's even more of a reason to take some money off the table.
There's no doubt, no doubt.
So, anyway, I mean, when we look at specific commodities, as I said, oil looks great, but it depends on these API numbers. The precious metals, they're going to trade with the dollar.
Yeah.
The agricultural commodities, it's up to the weather. I think commodities take a little bit of and Mike is asking about wheat, the same thing. It's up to the weather here. It's in a range of 450 is probably a good level. 440, I'm a scale down buyer of wheat, all of these things. But I think that the real action is going to be, the real juice is going to be in stocks, in bonds, in currencies. You're going to see a lot of craziness. I think that what you're seeing now could over-exacerbate the downside in these digital currencies. I think that, you know, we've seen Ethereum, Tom, fall from like $1,300. It's like $400. I didn't even look at it today. Do you know where it is?
I don't, but I just want to look at...
It's like $400.
XBT here, and I'll pull it up right now. So, yeah, it's pretty intense, man. So you got... Yeah, you're at 457.
Right.
So it was down an additional 3.5%. Yeah.
Listen to this one. So in December, the market cap of 1,500 and some odd digital currencies was 840 billion, roughly.
Okay.
Today, it's 307.
Wow. Yeah, because what he's talking about, folks, is that the tokens are built on Ethereum, and when it broke that, Tommy and I have been talking about it in the morning, because it broke where most of those were built on was like 550 or something, man. It was
these are some ugly numbers. You know, this is capital evaporating.
Capital evaporation.
Capital evaporation.
It goes to capital heaven. Stay right there, folks. Andy and I are coming right back. And we're going to have those oil numbers when we come back for you. Dow finished down 344. NASDAQ off 211. S&P's down 43. We'll come right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 344. NASDAQ off 211. S&P's down 45. We got our man, Mr. Andy Hecht. We are talking commodities. We're talking markets. And we're talking volatile markets, man.
Volatile. Hey, you know, I'm always looking for titles for my articles. That's a great one. Capital evaporation. I'll have to put that one in my back pocket.
Seriously, no doubt, no doubt.
You know, it just feels different. You know, corrections feel a certain way. This market just feels it's like there's like tremors. You know, it's like tremors. The big one. It just feels to me like...
No, I agree. What does happen is this, folks. This is the thing you want to keep your eye on. When you get fast counter-trend bounces like we did yesterday, that is an indication that you're going a lot lower. That's what I've seen. You can look at, you know, every big market, whether it's, you know, 90... You know, what's intriguing on this market here, and I've talked about this before, is that 1994... You know, the market only went down like about 12 or 13%, folks. But it hadn't gone down in so long that I saw people get wiped out.
Oh, they get wiped out.
And, listen, and it was because it hadn't gone down in so long, and people had kept leveraging up. And, you know, you look back and it was a blurb. But guess what? It was a 7-week market that would not go down.
It was a lifetime.
Right.
It was a lifetime.
Right.
So I'm a student of history, and I've read a lot of history in my life. And you know, when it comes to politics, there are always things that define politicians' tenure in office and stuff like that. And I think that one of the big mistakes that'll be one of the big mistakes will be of the president right now will be that he chose to use the stock market as a political poll.
Well, we haven't heard that for a while. Yeah, that's for sure.
But you know, believe me, he'll be reminded of it.
Oh yeah, right.
Particularly in the midterm elections, if we do have a huge correction in markets. And I think that was when he did it. I thought it was a real mistake. You know, I thought, you know, grasping at straws almost. Look, the GDP, these kinds of economic indicators that don't move a lot. If you're going to pick something as a poll, pick something that's not volatile.
No, listen, I agree. I think I think it just shows that he's in the housing market. He wasn't in the stock market. Anyone in their right mind that's in the stock market would never use the stock market to say, this is why we're doing better, because we know the stock market humbles everyone on a continual basis.
Oh my God, the stock market
Do you know what I mean? It's like, really?
The great instructor.
Yeah, It's seriously, man. It's
a very tough market.
Yeah.
No question about it. And listen, so many people wrote it. I mean, there are many people in this market who have really never seen a sustained bearish move. Listen, we had a bearish move. Remember 6 weeks, beginning of 2016?
Yep.
It was ugly. I mean, the S&P dropped 11.5% in 6 weeks. It was like that was all on Chinese stuff. There's a lot of other stuff going on here. You know, the Middle East is a tinderbox. You have this crown prince here in the U.S. And did you hear what he said today? He's talking about extending oil cuts to for decades.
Well, yeah, I saw he's making a deal with Russia, right?
They're making deals with everyone. He's going to make a deal with anyone he can make a deal with. He's going to make a deal with China too, to sell part of the production. No question.
So we get the first number. The first number, API said to report crude stocks build 5.3 million barrels.
That's a bearish number. Ooh, they were expecting like 1 million to 2 million. That's a bearish number. Let's see what the gasoline and distillates did.
Yeah.
But that is going to weigh on crude. And listen, if crude starts going down, oh boy. You know what I mean?
The thing that's amazing here, so if we bring this up right now, you're going to see that, so February 9th was that first big downdraft, right? Mm-hmm. ExxonMobil's already underneath it.
Yes.
That says quite a bit, man. I mean, you know, and we know that what has happened, folks, is that crude has not gone down when the Exxon, Chevron, they're way off their highs. Well, when I say way off their highs, they're $15 off their highs. But,
That's huge.
But it's only $73 stock. So
they're trading like oil is under $50.
Exactly. And
Hey, quick question: where were they last year at this time on this date?
On this date here, we'll bring it
just the XLE or
I bring it right back. They were $82.
So they were higher.
Exxon was $82, and Exxon is $73 right now.
Crude oil was $50.
And Chevron?
Crude oil was $50 a year ago. Today.
Right. And Chevron, oh, that's interesting. Chevron, Chevron was 108.
Holy crap.
But Chevron's 114.
That's a signal, man. That's a signal to put your seatbelts on and hold your nose.
Yeah, what's intriguing about that, though? You see the difference on Chevron versus. That's pretty intense. Okay, here's the rest of the numbers. We have. Let me put this up on here so everyone can see it on this side. Pop that. Okay, so Cushing had a build of 1.66. Gasoline was minus 5.8 million barrels. Distillates was minus 2.24 million barrels.
2.24.
Yeah.
Well, that tempers it, Tom.
Yeah, it does. No, I can see that.
Big time.
Right.
I mean, basically, you took. Basically, it's kind of bullish because you took 5.3 million barrels out of crude stocks, and then you got between the gasoline and the distillates, you got 8 million barrels of demand.
Yeah, and they have now. We're getting. I mean, are these refineries changing over now? And because before we know it,
of course
we're going to be talking about May 30th any second here.
Absolutely, they are changing. I mean, I think they're almost done changing.
Okay.
Over. The weather in the Northeast is not cooperating with that, but certainly they're on a production schedule there.
Yeah.
And they're bulking up because there's a lot of transportation that goes on between now and the driving season and all that. But when I first heard that oil number, I was like, oh boy. But the gasoline number, I mean, that is because
that's what we use, right? And the distillates, the distillates. I mean, that's probably heating oil, right?
It's heating oil, it's jet fuel, it's diesel,
right?
It's all of those because the heating oil contract is a proxy for those because they're very close in composition.
Yep.
So the bottom line here is it's kind of supportive of the price.
Yeah, no, I can see that.
So dislocation, bifurcation, all kinds of stuff going to happen, and we're going to continue to see that.
Oh, but it's interesting here. I'm looking at oil. They're nailing oil right now. Yep.
Yeah, they'll nail it, but someone will come in and buy it.
Yeah.
Or the crack spreads will go way up, and then they won't be able to nail it anymore.
Yeah.
Because no one in their right mind is going to sell gasoline down dramatically with a almost 6 million barrel draw.
Right.
That's a huge number.
Yeah, no, it is a huge number, isn't it?
It's a huge number. And by the way, just for people who listen out there, you know, we always wait for these EIA numbers to confirm them. Over recent weeks, the EIA numbers have been running very, very close to the API numbers. They've massaged that. They've gotten the statistics down to a point where the numbers are close. They've been a lot closer. We'll see if it happens tomorrow. That's probably Murphy's Law, but they've been pretty good lately.
Yeah, so we're at 64, 65.
Yeah, I mean, 64 is still a high price.
It is, man. It is.
You know? Yeah, all right, so we were at 66.40 this morning.
That's printing money. That's printing money. Listen, folks, right here, a half hour from now, 20 minutes from now, man. That's a beautiful thing.
Thanks, Tom.
Thanks, Andy. Have a great one, a safe one. We look forward to the show in 20 minutes. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Lululemon. So Lululemon closed at $78.71. That's trading up now $4, $82.98. And let's see what they're having to say number-wise out here. So the estimate was $1.27. They came in with $1.33, beat by 6 cents here. They let me see them trying to get the full numbers. Where are the full numbers? Up. Okay, here we go. So sales accelerated faster than expected last quarter. the yoga maker posted comparable sales growth of 11% when accounting for currency effects and direct-to-consumer channels. Okay, so the profit was $1.33 a share. Gross sales, the estimate was $912 million. They come in with $928. So bottom line is that we're spending money in Lululemon. And if we pull this back and take a look at it, this is pretty impressive also. What's impressive about this is that, you know, we get a monster volatility market out here. If we bring this closer, you're going to see that it's pretty amazing, actually, that Lululemon just never even sold down the last few days. It's pretty amazing. On the 6th, we got down to $74. That we had been trading $79. Didn't get bothered then. Pretty intense, man. This is really intense, actually, when you look at it. Understanding that the sell down in the rest of the shares in the marketplace versus the sell down in Lululemon, which you didn't have. Intel was another impressive one out here, folks. If you look at Intel, Intel no doubt was also impressive, meaning that, you know, even on what happened on February 9th, Intel sold down, but yet you did 49 million shares, and you're going into 90 million. You know, so Intel's the same type of setup, meaning that, guess what? That doesn't have to get back there. I suspect that a big retracement you would, but this is strong like bull. Netflix is another one. You take a look at Netflix. Netflix is right up there. You know, Netflix, when that also sold down, all that was doing was getting into a gap, and that sold down with lighter volume, actually. We did 16 million versus going into the gap with 27, you know, and Netflix just refuses to back off. So pretty intense when you take a look at a few of these stocks versus NVIDIA. You know, we take a look at an NVIDIA, and what you're going to see is that that baby not only went down, but you're going down in spades. Do we have a call, Al? I can't see it.
Hi, Tom.
Yes. How are you? What's your name?
This is Carlos. How are you?
Oh, Carlos, man. What's going on, brother?
I'm doing all right.
Yeah? That's good.
Yeah.
That's
Yeah.
great to hear your voice, man.
Oh, it's always a pleasure to talk to you. Your son, too. I just missed the show this morning, but I was able to call this afternoon. Tom, I have a question related to the S&P.
Yes.
In the end of the month, the window dressing that we may or may not get, because the way it looks seems like no matter where I put my stops, I get
Yes.
stuff out.
No, I'm with you there.
Yeah,
Right.
This seems like it's not a market where I can place a stop. Even a little bit wide, it's still I've been a stop out. And my question is, do you see any window dressing at the end of this month based on what the daily chart shows on the S&P? Because what I can see seems like with what rebound we did yesterday, I don't know if the candle already engulfs yesterday action. If you can help me with that, please.
It has, yeah. So, I mean, this is what it looks to me like. We really get a very large ABC structure on the way down, Carlos. You know, you had the S&P today get to 2679, gave it up, had lighter volume than the downdraft, so that's the definition. You know, you come down with volume, you go up with light volume, doesn't hold price, which means that it's even weaker than, you know, because a two-day deal, man, that's nothing, you know. Now, what we have here, and this is what I think is a real danger in the marketplace, the market's closed on Good Friday, which is this Friday.
Yes.
You still have 2 days, and window dressing doesn't start till next week.
Exactly.
So, you know, it looks to me like this thing's going to hammer into this low of the 6th. You know, and the ABC structure on the way down, the price projection is a lot lower. You know, the hardest thing in a market like this is that if you see, like, let's picture that the S&P goes down dramatically. It takes 1, 2 legs down, and you get the expansion way over a 1-to-1 ABC structure on the way down, right? If you trade in the S&Ps, what you really should do, futures in general, most times I just close those out. And the reason is that in a market like this, what can happen, just like yesterday the market was up 700. I've seen, I mean, remember in 2008, I've seen a market, I saw the Dow open up 900. And it was awesome. I mean, you know, but that's what happens, what I've seen in very bad markets on the way down. The counter trend bounces are huge. And so if you get close to your price projections at the end of the day, you got to really think that through if you want to hold them overnight. Because what happens, folks, in a future trader, Carlos, if you trade futures, you know, I particularly like to hold them, okay? Because what ends up happening is that, you know, if you think you get the market right, you can wake up in the morning, great. Then you can close that and you start all over again. In a market like this, you got to be like really, you know, it's not being more careful, it's being more attuned that you can get moves like that and you can get hurt pretty quickly. Or you can give everything back. Do you know what I'm saying?
Yes. I like to buy extremes, Tom. And
yes.
When I saw the market dropping last Friday,
yep.
I was planning on buying on Sunday. So what I did, I bought it on Sunday. And I did well.
That's awesome.
I sold some of my S&Ps.
Yep.
But I put the stop in the rest, and I got up out today very, very quick.
Yeah, but I like what you said. Buying extremes is good, man, and selling extremes is good. It just it takes a different animal to do it. You know, and you're certainly a different animal and a great one. But that's that's
and that's what I actually did this afternoon. But I have this feeling that this is kind of different than what I saw Friday, because I saw the VIX not really spiking as Friday.
Yes.
And I was expecting more pullback or sell-off, and I saw the Dow Jones not really touching the lows, except for the Nasdaq and
right.
Small caps. So S&P and Dow Jones didn't touch the lows today, but that doesn't mean it's not going to do it tomorrow.
Yeah, and some.
So I'm going to see.
Oh, go ahead.
Yes,
I'm sorry.
Go ahead, Tom.
No, go ahead.
Well, I'm going to see what happens tonight.
Yes.
So I can actually see if I can make any action to get out and wait until tomorrow and see what the action is.
Sweet. So good to hear from you, Carlos. I'm going to text Tommy right now. Tell him I talked to you. Thanks, man.
Thank you so much.
Okay.
Take care.
Have a great one, Carlos. Bye-bye. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great bright long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over and we're going to follow up talking with Carlos here. So if we take a look at the tick, folks, what we did get out here today is the first large tick, down tick. Now, the way that I look at these down ticks, you're going to get 2 large down ticks within basically 3 to 4 days. Then you're going to get a rejection of price. But the first one did come in today, so there was fear in there. We get a minus 1487. That's a big number. You get now the second down tick that would come in only has to be 70% of that. You get 2 of those, that's saying you're getting close to another bounce. Now the trend wasn't there. Right now the trend came in at 1.54, and a normal trend, if a market basically is in equilibrium, you know, going up or going down, is a 1. That means that the same amount of people are buying or selling in an orderly fashion. What you do get when you are getting into bottoms, you'll see that trend run up to a 2.50, 2.70, and what you want to put together is that you have that part put together, you have the tick put together, then you get a rejection of lower price. Right now, the way that the bond market is running, the bond market is saying that we're going lower, like right now, because we're right next to, if we take a look at this, you know, you're right next to the swing point inside the 30 and the 10-year of February 14th. And that's a high volume swing out there. So 146.21. And what's going to be intriguing, of course, inside the bond market is that you have the aspect that, you know, the Fed has gone up on short-term rates, say they're going to go up on short-term rates, but what you have is that the 10-year now is at 2.77. Now, we also have, and this is where this is going to get tricky, is that you're coming into the end of the quarter, and what does end up happening at the end of the quarter, folks, these large companies, okay, particularly in a market that is going lower, are going to want to put bonds on their books so they can just show that they're bonds on their books. And that's going to be, that could be forcing some of this right now. Pretty wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Stay right there. Our man, Mr. Andy Hex, coming up next. Wow! Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.